stock market was literally seconds away from a catastrophic breakdown this morning. We were looking at a technical setup primed to wipe out massive value in a heartbeat. We just got the worst possible economic combination. Stagnant growth paired with rising inflation, yet the S&P 500 suddenly rallied instead of crashing. You need to understand exactly what just happened, because this rescue might actually be a trap. Here's the reality. GDP clocked in at a miserable 1.4%, missing forecasts, while core inflation remains sticky at 3%. That is textbook stagflation. The charts were screaming for a drop. The S&P 500 is forming a dangerous head and shoulders pattern. If that neckline breaks, we aren't just talking about a red day. We are looking at a flush down to 6,350. Major indices are fragile. If the Dow closes below 49,300, it triggers a sell-off that could shed nearly 4,000 points. Big names like Nvidia and Amazon are hugging support levels that, if broken, signal a 15 to 20% correction. So what stopped the bleeding? At the last second, the Supreme Court ruled tariffs illegal. The market algorithms immediately grabbed this as deflationary news, using it to cancel out the inflation fear and squeeze stocks higher. It feels like a coordinated effort to mask the bad economic data. But don't be fooled, removing tariffs doesn't fix a slowing economy or stopping AI-driven job cuts. This bounce is likely a short-lived reprieve before the S&P eventually targets 6,100 at $100 later this year. The technicals haven't changed, and the next move could be decisive. Hit that subscribe button right now so you don't get caught on the wrong side of the crash.